Wait, what? I can do that? This is Eric Bell with Wait, what? Financial matters that matter for business and the people that own them. If you missed last week's episode on commercial property and business insurance with Jermaine Brown, that's one you'll definitely want to circle back to. I'm fortunate today to have Noelle Nitz with me. Noelle is a fractional CFO who specializes in helping companies level up, whether it's a company in a cash crunch or a company that wants to grow significantly. Noelle works with a leadership team to transition the company to the next level. Over the past 20 years, Noelle has worked with several companies in various industries, from manufacturing to professional services. Unlike most CFOs, Noelle provides strategy, leadership, and business operational skills, along with her finance and accounting services. That combination creates a broad range of solutions for the clients, far beyond financial statements and budgets. Prior to starting her own CFO consulting practice, Noelle was vice president at Barclays Business Credit, responsible for a $150 million commercial loan portfolio. Her educational background is in finance, and she completed the CPA exam. She was with her family in Newport Beach. Thanks for joining us, Noelle.
Thank you for having me.
I had one basic question I wanted to ask you because it's always in my mind. What's the most important thing that a CEO needs to know about finance?
Probably the most basic thing that every CEO needs to know is what is the difference between a controller and a CFO?
How do you mean?
So often people have a controller and they think they have a CFO. The thing is that every company needs a great controller and a great CFO, depending on the size of the company. A controller is someone who is pretty much at the expert level of accounting. They can manage your accounting department. They make sure everything goes into the right buckets. They produce every report that you need. They can often, even if you ask them, hey, where can we save money? They usually know where to save money. They usually know where too much money is being spent. Like if a certain salesperson has a lot of money on their expense reports, or if you're spending an excess amount in your office supplies, they are the person who can tell you that. What they can't do and what you need a CFO for is strategy. You need the CFO for the future. So in other words, a CFO is someone who is guiding the controller and telling him, hey, look, can you provide this analysis for me? Can you look at these two different expenses and see how we're doing? A great CFO is working with your tax accountants. They're not only just providing reports to your tax accounts, but they're working with them to provide strategy in terms of how can you best possibly reduce your tax bill. They'll also work with your legal team. They'll work with you in determining whether you should go into a different product line or not. They are an integral part of the executive leadership team that has both vision, strategy, and leadership. A controller is just a great person who can tell you where every single account is and exactly where you're spending your money.
A CFO is more focused on where the company is going versus as opposed to a controller as to where they've been.
That's exactly right. And I would add a little bit to that. I would add that a controller can't necessarily tell you why something happened in the past, whereas a CFO really can. A CFO can be a detective and find solutions, whereas a controller, properly guided, can tell you where things are.
Let me ask you a question. You said you are a fractional CFO. Can you talk more about that?
Sure. So I specialize in working with companies who are too small for a full-time CFO. Having said that, a lot of people have outgrown their accounting department, right? Like no one gets into business because they're super excited about accounting and debits and credits, but it's integral to every business. So at a certain point, A, you need to know whether your accounting department knows what the heck it's doing. And two, you need a bit more strategy so that you can level up, so you can move up to the next level.
Let me ask you this question. What's the most important factors that negatively impact a company's profitability and growth, would you say?
So for profitability, 100% it's visibility. It starts with having good basic accounting, but being able to recognize when it's a good accounting. So it's not even enough to have accurate accounts, right? I've been with clients who maybe all the accounts are in the right spot, but the way that the financial statements are set up and structured, it doesn't tell a helpful story. It doesn't provide visibility to the leaders in terms of what's going on in the actual company. And if you don't know what's going on, if you don't know where your money's being spent or which product you have is more profitable than others, how can you actually make good decisions? So I'll give you an example. The client where I was yesterday, there were some things that weren't making sense to me. It seemed like the employees were always asking me to buy more inventory And yet the financial statement showed me that I had a ton of inventory. So I thought, what's going on? My sales haven't moved much. Why do I have so much inventory? And why are they keep asking me to buy more? So as I'm really trying to solve this problem and become a detective, I'm looking into things. And as I'm talking to my accounting manager there, as I'm looking through the financial statements, I really found a way to pull out the fact that we spent at least $75,000 giving away free product. Now, this was something that was happening kind of behind the scenes, and it was nowhere that was clearly visible. So that's what I mean about visibility. When you're able to really pull out all the major things that are happening in a company, you can really see what's going on and then make really great, profitable decisions. Otherwise, it's like having small leaks that you don't know are happening.
Was that giveaway part of their marketing program, or why were they doing that?
So it was part of marketing. It was part of sales. And for all of those, I would say this: you absolutely have to spend marketing and sales. You absolutely have to do things that work for you on a promotional basis. And yet, if it's not actually leading to great sales, then it's not helping you. So understanding what that relationship is. Sure, do we need to give away free product? Absolutely. But do you need to give away $75,000 worth of free product?
So it was excessive.
It was excessive. And even if the marketing team tells me, hey, this is not excessive, we need to do this, fine. We just may need to change our prices so that we're not taking it in the shorts.
Let me ask you, what do CEOs struggle with the most, and how do you help them?
The thing that they struggle with the most, hands down, is accountability. I work with a lot of CEOs and business owners, and they will tell me, I just don't know how to keep my folks accountable. So every single person in a company needs to be measured, and salespeople are absolutely the most top ones that need to be measured. So for example, if you have a salesperson who's never in the office and he's out, how do you know he's actually doing a great job? Well, some people will say, well, you know what? He's got the highest sales in the company. All right, that's great. But how does that compare to last year? How can you make sure, if you're a company who wants to grow and you have a salesperson who you need to grow their sales, how do you hold them accountable? Well, one of the great ways that a CFO does this is providing really objective information. How much did this person sell last year? How profitable were those sales? What do you expect this person to sell this year? What should be the goal if you want growth? What should be their growth? And how are they going to get there? So what that does is it takes all the emotion out of it. Usually CEOs have a ton of emotion around their employees being their most important asset, right? And if their employees aren't helping them grow, then how are they going to get there? So the first thing they need in accountability are good metrics.
Well, you sound like a salesperson's best friend.
Actually, I am. You know, in the beginning, no salesperson is all that happy to see me. But once they really realize that by collaborating with me, I can help them increase their sales exponentially, right? I help them increase their money. So I should be their best friend.
There's a lot of talk about a 2020 economic slowdown. Do you believe there will be a recession? And how are you helping companies prepare for that?
So I don't have a crystal ball. However, I think that there's a decent chance that we will at least have an economic slowdown in 2020. But no matter what's going on in the economy, I always help my clients do two things. I help them plan for a zombie apocalypse, and I also help them plan for great growth. So that requires two things. One, you plan for a lot of growth. How do you need to resource that growth? How will we know we're successful and on our way to growth? At the same time, we have to know when our plan is not working and when we're going to have to make the drastic changes it takes to survive a zombie apocalypse. So it's almost like we're riding two waves at the same time, and the trick is really knowing when you have to switch from one to the other. So you can not only thrive, but then also survive if things don't go as well as you hoped.
And then you got everything covered in the middle. If you have those two extremes covered, you got everything in the middle covered.
That is absolutely the hope.
So what are some of the most valuable lessons you have learned about business from your experiences as a CFO?
The thing that I love about being a fractional CFO is I learn every day. I get to have the experiences of not just one company, but several companies who are experiencing many different things, challenges, successes. I'll learn things as simple as working with a certain workman's comp insurance broker. They're much more talented and can help us save a lot more money than another. It's as simple as that to, I think the most important thing that I've learned as a CFO, especially as a fractional CFO, is that you can never rest on your laurels. Business is a Rubik's Cube that once you figure it out, will automatically reshuffle itself every once in a while. So you can never stay static. I'm always thinking to myself, the environment has changed. How do I need to be a different CFO so that I can better serve my CEOs? I'm always thinking, if my CEO has done a great job running a $5 million company, How does he need to be different? What other skill sets will he need to be capable of running a successful $7.5 million company? So I would say that the most important thing I've learned is that you always have to be changing and adapting and growing yourself in order to be a successful business person.
Let me ask you this, Noelle. What's your process? Let's say you're meeting a new CEO for the first time. How do you engage him? What's your process? How did he find you? How does that all work for the first meeting?
Virtually everyone I meet is by referral. It's because another service provider, a tax accountant, an attorney, a banker knows me and has heard about me and has referred somebody in. And they're usually referring me in because a CEO is saying, I'm really struggling to grow. I can't figure this out. First of all, I don't have great books. I don't have visibility about where my company is now or how I should make great decisions about the future. That's usually why I get referred in. When I first meet the CEO, I basically tell him, hey, I would just like to hear about your business. So the most important thing that I do is listen. I ask the CEO to tell me about their business, what they're struggling with, and what would success look like if we're working together. Like if this person is going to bother to start with a CFO, right? No one says, hey, wouldn't it be fun to hang out with a CFO today, right? So there's got to be a reason. So I really try to get down to what is the success that CEO is trying to achieve, or what's a problem they're trying to solve? And then I always do this on site. I always like to look around. I like to meet everybody. I like to go into their warehouse. I like to look at their inventory and see what the environment is like in their company. And just from even walking in the door, there's so much I can tell about a company. So my first part of the process is really listening, understanding what they want, and seeing if we're a fit. I think probably the best way I can see if they're a fit is I like to know if they're actually really serious about making changes, right? Like I don't want to work with anybody who's just like, hey, I'd like to stay the same and just stay here and keep going. And, you can come and just be the same with us. Like that's no fun. I have plenty of referrals. That's not any good time. I also don't want to work with someone who's in big trouble and they're not willing to change. It's going to be frustrating for both of us. So in finding the fit, I'm really looking to work with someone who is curious, who's really looking to grow their business and is willing to do anything to do it. I'll tell you a little story. One client that I met with for lunch, he was a prospect at the time. I ended up working with him for a few years. He was telling me about the struggles he was having in manufacturing. He was telling me that his son was running the manufacturing and that he didn't think his son knew what he was doing. So basically I asked him this. I said, hey, look, if you have a choice between allowing your son to run manufacturing or making it successful, are you willing to fire your son? And he unequivocally, without hesitation, said he was willing to fire his son. And that's when I knew he would be a good fit.
I'm glad that's not my daddy. Man. All right.
I would say no one is ever successful whose parents constantly entitle them. So actually, it would be good to have a dad who will fire you.
But we both see that happen. We both see that happen, though, where the kids are just automatically assume they're going to go ahead and take those roles over, whether they're responsible or not.
That is a really good point. And I got to tell you, whether it's a family member, and I've had plenty of family members, or it's someone who's a good friend who's been working with a client for a long time, I will tell you that's the single largest thing that holds a company back from growth. Someone starts a company, they've been running the company for a while, they've had the same leadership team, if you can call them that, all the way up until they're 4 million. And these people are people that they trust and they love them. And what I have to help them recognize is that if that leadership team does not have the skill and cannot grow to do the things that a $6 million company needs, they've got to move away from those. And that's probably the single hardest thing for any CEO to do. They're like, gosh, Bob's been in my company for 20 years. Bob has helped me out. Bob has foregone taking a paycheck at times when things were hard. And we have to get down to the point where we're like, well, if you know that to be a successful $6 million company, that Bob has to have X, Y, and Z skills, and if you know that he can't gain those skills, you're literally telling me you'd rather hang out with Bob than have a $6 million company. And that's a really hard thing for anyone to kind of get over.
Well, if you keep doing what you've done, you keep getting what you got.
That's right.
So you got to upgrade people or send them on, I guess.
You either upgrade or you stay stagnant and die.
Right.
And that's, right? I'm a CFO. I love numbers. Numbers tell me a story. Everything is pretty clear, right? But what I learned a long time ago was that the most important asset in any company are the people. And if I can't help leaders understand how to get the best out of their people or to move on from people who aren't doing it, I really am not that valuable as a CFO. And that's probably the biggest thing that's different for me than other CFOs.
Anything I left out, Noelle, that you want to share with us, the listeners?
Well, there's so much that, and just in my 20 years and working with so many different companies, I have so many stories from clients, like success stories. And I will just tell you one of the success stories because I think that it really illuminates how massive of a change a company can make if they're willing to work with a really good CFO and move forward. So a client that I started working with a couple of years ago, he had his business for 25 years. He really, really, really wanted to grow. He was not someone who was happy just having a little company and, doing work day in and day out. And he put in the work, right? Like he had employed people, bothered to put in processes, had a good system, computer systems in their software systems. And he was struggling with cash flow. And he was struggling with just not growing. Like he just could not grow no matter how many more additional sales he got in, no matter how many employees he put on. So in working with him, I found that he was a really great fit because he was really serious about moving forward. And so he and I worked out on a whiteboard, like what are the key metrics that are going to be the difference in him growing? He had enough people. He said, look, I have enough people. I should be able to invoice all this money and I can never invoice that amount of money. What we came down to was he had a bunch of technicians who were working all day. They were clocking in all day. He's paying them payroll. They actually weren't invoiceable. So in other words, even though they were billable, they were clocking in as billable. I'm working on a job. They were not invoiceable. They couldn't put all those hours that people were working actually to a bill. So we found a way to help them measure that themselves every single day. We knew like, hey, look, in an 8-hour day, you got to be invoiceable. Someone has to be willing to pay you for the work you do 6 hours of every day. A client has to. That's something that easily each person could measure themselves, right? I get that. I can measure that. Within 4 months' time, we increased sales, invoices by 40% with the same number of people. So I would say, right, like if you know where to look, if you know how to measure the absolute most important things, you're going to improve your business.
Well, thanks for being with us, Noelle. Appreciate you coming in.
Thanks so much for having me.
To get hold of Noelle, the Fractional CFO, please email me at eb@wait-what.biz. Thank you. Next week, we're going to have business and privately held asset valuations with Carrie Potter. That's one you'll definitely want to listen to.